Welcome back, everyone, to Not Your Advisor with NYU Grad. May 8th, Wednesday. Start your timer. This is going to be a short one. So let's jump right into the session. If I had to summarize it, volume on the S&P ETF SPY was down 47% of its daily average volume. So right at 4 o'clock, New York time, 37 million shares traded on an average daily volume of 70 million shares. Now, I've been pointing out lack of volume every session for the past four as we've been rallying. This is concerning because what's going to happen is volume will come back eventually, maybe tomorrow, maybe Friday, after the weekly options expiration. But when it comes back, it'll be important to see if it's predominantly sellers or buyers. So let's go. Let's start with the breadth numbers. We had 350 new highs versus 127 new lows. Bullish. This is, I believe, the fifth consecutive session where new highs have beat new lows. That's great, despite the low volume. We had 43% of stocks advancing versus 53% declining. That's a little curious that we have more declining than advancing. Looking at the most important 50-day moving average, we had 44% of stocks below its 50-day. Not bad. If you recall, last week, 2 weeks ago, we were at 70% of stocks below the 50-day. So a lot of damage repaired. And we had about 34% of stocks below its 200-day moving average. A little better because it's been more or less at 40% below the 200-day. Taking a quick look at mega cap land, it was pretty muted, to be honest with you. Microsoft was up 0.29%, Apple was up 0.19%, Google was up 1%, Meta was up 1%. Google was down 1%. Nvidia was down 0.16%, Amazon was down 0.40%. So not too much of a big deal. Even Tesla, a high beta name, was only down 1.7%. Taking a look at sectors, it tells a little bit more of a story here. So as you know, I've been pointing out that on a lot of updates, we had utilities leading and technology backing up the rear. And guess what? Utilities led again today after taking a break. This is not good when utilities lead. FOMO traders, meme traders on Reddit, they're not buying XLU. They're not buying utilities. Utilities led up 0.76%. Who was second place? You think it was technology? No. Industrials. Third place. You think it was technology? No. Financial. Then we had technology up 0.01%. Looking at the red sectors, you had real estate down 0.78%, leading the way to the downside. Then you have basic materials, communication services, and then healthcare. That's really it. I mean, I'm curious. I want to throw this out there. So since we're not talking too much about markets and prices, you all have been very generous in answering some of these poll questions. So I'm going to keep it going. I want to share the last poll from the weekend was, will the NASDAQ make another new high in 2024? And I only had 20 votes, but it's 50-50. So nothing learned from this other than everyone is confused, just like everyone else. The new poll is going to be, how many financial advisors have you fired? The options are 1 to 3, 4 or more, none, or other. Please leave a comment and explain yourself. Now, let's keep it civil. If you have something really good to say about your financial advisor, it might be cool to shout them out. That's fine. I have no problem with that. But if they were fired by you and you didn't like their performance, be constructive, right? Like, don't like blast them. Don't like link to them. Say never deal with this person ever again. I mean, it's your prerogative. This is a free country. But I'm just saying, keep it civil in the comments. But that's the new poll. How many financial advisors have you fired? So in the free section of the show notes, I'm going to post the Thursday and Friday economic data coming out. On Thursday, you have in the morning initial jobless claims, which is completely BS numbers. 2 o'clock, you have Mary Daly, SF Fed President, speaking. I don't know about what, but she's talking on Thursday. Friday, you have Michelle Bauman talking in the morning. Then you have consumer sentiment at 10 a.m. Then you have Chicago Fed President Goldsby speaking in the afternoon. Then you have Michael Barr speaking at 1:30. And then you have the U.S. federal budget at 2 o'clock on Thursday. On Friday. I will also be posting a graph of job postings on the show notes, but it's from Indeed.com through the Fred Data website. And you can look at this chart. The job openings are plummeting every month. This is not a good trend. I'm also posting an image of the true rate of inflation, true rate of unemployment in this country, not that BS 3.8% rate of unemployment. And then I found two very interesting videos overnight that I posted on Substack Notes. The first one is a gentleman in Japan who's about 50 years old. He has 2 kids. I don't know the situation about the wife, but he just kind of talks about how miserable he is with the prospects of life in Japan with inflation. Take a look at it. And he also reads the survey data from Japanese survey takers in that age group as well. So it looks like inflation is really beating down the country, in addition to a lot of the other demographic headwinds there in Japan. And I often wonder, is this all just a byproduct of World War II and potentially the 2 atomic bombs that went off there? And I'm not saying who was right, who was wrong. Obviously they bombed Pearl Harbor as a military, and, a lot of Americans died during that Pacific theater. So I'm not saying who's right or who's wrong. I think all war is pretty senseless. But it's just, I often wonder, like having 2 atomic bombs drop on you, are you going to then just be subservient to the U.S., say yes to the carry trade, say yes to inflation, and have just a whole population that are just miserable not having kids? The other video is in this video from Nico on YouTube. He lives in California. He just got laid off 2 weeks ago from Tesla, and he had like a 15-minute video basically explaining that because of this layoff, he has come to the conclusion that he wants to, or he has to, sell his home, which looks like a pretty new construction home, by the way, in California. He's going to sell the home. He's going to sell all his belongings, all of his furniture, and live in the Tesla that he has for 5 years. And his plan is to put away $2,000 every month for 5 years, living in his car. And he is hoping that after 5 years, he will be self-sufficient with that $120,000 that he's saved up in the stock market, and be self-sufficient, be no longer part of the rat race. I find that a little bit naive because he's young, and maybe he's the greatest trader in the world. I don't know. But it looks like he doesn't have experience, unless he's been trading since he's like 10 years old. And he has a new job I believe, at a GNC retail store. I think he has a lot of hustle. I don't know him from John Doe. I don't know his work ethic for real. I don't know the real story about why he got laid off on the production line at Tesla. But, I wonder how many more stories like this we're going to see in the coming months and years. Hopefully he bounces back. Hey, maybe his YouTube channel will blow up in a good way. He has like almost 1 million views on his layoff story. So check that out. I thought that was pretty interesting that that's happening now. And obviously layoffs impact people very poorly. But at the same time, coming from the corporate world, managing and hiring and laying people off myself, whether at a startup or while I was at Adobe, people shouldn't take this personally. Companies will have layoffs, and a lot of companies will do it the right way, and a lot of companies will do it the wrong way. But just know, when you accept the offer letter, unless, I don't know, you're like a VP, you're the C-suite, they're giving you like 1 to 5% of the startup in equity, and you're like really big shit, right? And like you're a big deal. It's a job. It's an exchange for your work, your sweat equity, and your time every day. And what you're gonna get back in return is a salary or wages or hourly pay or whatever it is. You're gonna get health benefits. You're gonna get, potentially, if they're really good, a 401k, a 401k match. You're gonna get, if you're you're part of a big global tech company like Adobe or Google or Microsoft, you might get really great benefits for family planning and life insurance and all that stuff. That all costs the company money, right? Like my Adobe healthcare plan would have been like $700 a month if I paid for that myself out of pocket. And that is something that Adobe picks up. So it's not easy for employers to give all of these benefits. So there is a value exchange there. You're not married to your company. They cannot stop you from quitting and going to a competitor for the most part, right? Like non-competes are very hard to implement. So just know the risk is on the company too. You can be a software engineer. You can be, the most brilliant AI scientist at Google. There's nothing stopping you from leaving. So that's a risk to the company. So there's nothing stopping them from firing you, right? That is the nature of a job. Don't take it personally. However, if your manager sucks and they didn't give you the heads up, or they didn't try to help you navigate your career, or if they didn't coach you, all of those things, then yeah, it's a sucky manager, sucky company, whatever. But don't take it personally from an enterprise level, right? Like it's gonna happen eventually to most people. But again, it's a sucky story. I hope this guy Nico bounces back. So check out that video. Let's keep going here. What else? That's really it. I'm going to go through what was strong. Actually, I already went through that. Utilities was strong. What was weak? There were a lot of weak stuff today. Shopify down 18.5%. Affirm Holdings down 9.5%. CPNG down 9.26, Klaviyo 7.91, Red Rock Resort 7.62, ACMR 6.48, Uber 5.72, Yext 4.04, Roblox 3.72, VinFast Autos 3.65, Zscaler 3.33, PayPal 3.20, Natural Gas 2.71, Uranium 2.75, Zillow Group 2.71, ARC 2.46, New York Community Bank 2.45, DR Horton 2.42, Intel 2.22, DoorDash 2.22, Kura Sushi 2.16. I might have sushi tonight. That's really it. For the free members, keep watching the Mag 7. Keep watching yields, especially the 10-year and the 2-year. There are a ton of still like earnings coming out, but most of the big names have come out. And premium members, stay on or stay in. You don't have to. I'll post all the chat in the private notes. I'll post all the charts. You don't have to stay on, but it's going to be a very short premium session.